Well, hello, my friends, and welcome back to another episode of Legacy Farmer, the podcast. This is your host, Jace D. Young, and today's topic and discussion is this: increasing interest rates. So I think everybody inside of just the business world in general, but especially the ag world, is extremely concerned right now about increasing interest rates. The Fed bumped up interest rates by 25 basis points the other week, and all of these ag banks immediately adjusted their rates, or at least a lot of them did, because what we're seeing with our members inside of Legacy Farmer is a lot of them got notices immediately that the banks would be raising their interest rates on their line of credit by 25 basis points to match the Fed's increase. Now, the problem with this is, though, my friends, is that the Fed, through the rest of the year, has a target of increasing, they keep changing it from 200 basis points to 300 basis points and back and forth. So basically 2% or 3% is what they want to increase rates by in order to keep the economy from going into a recession and things like that, which, arguably, if they do that, that could be the one thing that spins us into a recession, which we are easily due for. You can only manipulate money in the markets for so long before shit starts to break. I think we can all agree on that. Now, the problem with this, my friends, is a lot of farmers and ranchers over the next 3 to 4 years are honestly going to get wiped out. And I know that's not what people want to hear, but it is the absolute truth, because we've been spoiled with cheap interest and cheap capital the past decade. And even longer than that, really, since 2008 when they lowered interest rates back then. And we've got conditioned and used to 3 to 4% on operating lines, or 3 to 4% on 20 and 30-year fixed rate real estate loans. We've been extremely spoiled. Now, the problem is, though, is that if we increase interest rates, there's a lot of farmers and ranchers out there. One, they don't have their numbers organized and don't even know where the heck they're at. But two, when the bank starts increasing their interest rate on their operating line credit, let's say it's up by 2% now, guys, a lot of them, they won't be able to financially make that work. Their cash flow won't work long term. Now, it may work at this moment, the time that I'm recording this podcast today, because grain prices are so high. But what happens when grain prices correct and the banks don't drop interest rates? Paying 6, 7, 8% on your operating line when we're back down to lower grain prices, guys, it's not going to work. That's why I said over the next 3 to 4 years, there's going to be a major cleanse, because the people that are not organized financially and do not track their numbers at a detailed level like what we do inside of Legacy Farmer with our members, they're going to get wiped out. And it sucks. It absolutely sucks. I don't want to be the one saying that, but the problem is, though, and it's not, yes, it's our fault, right? Yes, it's your problem. It's your fault if you end up getting wiped out. But I'm also going to talk about how our country and the people running our country also did things that, contributed to this happening. And that's what I mean by cheap interest rates. So, for example, dropping interest rates to dang near zero, having 3 to 4% available to you with capital and getting access to money in the banks to go buy real estate or your operating line of credit or whatever, that right there contributed to us making unsound financial decisions. We bought things because we could, because interest rates were low. Versus if rates would have stayed at 6, 7%, I guarantee you millions of dollars in ground that farmers bought over the past decade wouldn't have been bought. Because at 6, 7%, they can't swing the payment. It doesn't work. And the perfect example is 30-year mortgage rates, for example, on home loans, increasing from 3% up to 4.95 in a matter of 2 months. Now, just to put that in perspective for you, on a $500,000 loan payment, just going from 3% up to 4.95 is a difference of about $600. That's a difference of about $600. So that is going to be a massive determining factor in a person's ability to buy a home. But just a 2% difference there on $500,000, whereas I know some farmers that are sitting on $3 to $4 or $5 million in real estate loans, and go back the last 10 years, if that stuff was 2% higher or even 1% higher, they probably don't do it because the payment's way too much. They're paying way too much in interest. They can't cash flow it. So the unfortunate truth is that our U.S. government and that the Federal Reserve has created a system to where they have proactively contributed to people making unsound financial decisions because they have easy access to cheap capital. And the consequences of this are well on their way. And people are going to get wiped out. So even with all of our members inside of Legacy Farmer, they're coming in and they're, some of them, one of our members out in California, the bank out there raises rate by 2%. Well, the Fed only increased it by 25 basis points. Now, the thing is, though, is that this is happening all over the country. How many farmers and ranchers do you think aren't saying anything about it? They may whine and complain. The thing is, guys, with our members, they're coming back strategically. Our members are so organized in their numbers with Farmer Metrics and what we help them do. They're going back and they are strategically correcting the bank and telling them, hey, this is why you do not need to be raising my rates. And there's a couple key reasons there. The biggest one is that our members know exactly how the banks make profit. They know exactly how they work and why them raising their interest rate by 25 basis points isn't even justifiable. And here's why. Because if they're raising their rates on loans by 25 basis points, but you don't see your interest rate on your checking account, your savings account increasing by 25 basis points, the bank just increased their profit margin massively there. Again, now, if you don't have your numbers organized and you're not proven to your bank that you're a grade A credit that they do not have to worry about, then you're not going to have any leverage or power to go in and negotiate rates back down. All of our members do. And that is the biggest thing that I want to help them do, especially when we get into uncertain times in the economy. But I'll tell you, like with all of our members, all of them send in their Farmer Metrics. We have a detailed report and printout that they can send over to the loan officer. I cannot tell you guys how many loan officers come back to our customers and say, you guys are the most organized customers we have in the bank. This has happened several times. And that's exactly what I want to hear, because when you are that type of customer to the bank, you get what you want. You are able to negotiate. You are able to put yourself in the best financial position possible with that bank, because at the end of the day, they either play ball with you or they know that you're so organized and you're such a grade A credit with zero risk, you could go get financing anywhere. And if they don't do it, somebody else will. So this is just the importance, my friend, of having your numbers organized and structured in a way that you know exactly what's happening. But then two, we're structuring them in a way where we're answering all the bank's questions before they could even ask them. Like, we're literally taking away all the power and control from the bank, which is why even when they want to raise interest rates, our members are still in the position where we're going to go negotiate it right back down. And we're going to explain to them exactly why. We're going to tell them exactly how they're making money, how we're making money, and everything. We're exposing them. And that's so powerful. It gives our members so much more power and confidence when it comes to running their operation. But again, we look at the overall, economy today. And the unfortunate truth is, legacy farmer is only so big. We've helped over 300 family farms. There's 2 million farmers inside of this country. 95% of them are going to struggle over the next 3 to 4 years because they do not have access to this information. Maybe they don't want it. I don't know. But it's just the reality, my friend. So whether you are a part of Legacy Farmer or you're not or whatever, get your numbers organized. Start paying attention to this stuff. Start going through your monthly cash flow and figuring things out and calculating, okay, if I can, make my cash flow work at a 4.5% interest rate on my operating line of credit, what's going to happen when I go up to 6.5%? And if it does go to 6.5%, how can I negotiate it back down with the bank? What are the things that I can expose on them, or where are my points of leverage so I can make sure that I am protecting the profitability of my operation and my family as much as I possibly can, especially in volatile economic times like we are inevitably going to face here over the next 2 to 5 years. And I'm not confident that it's going to go very smoothly, and I think it's going to be really rough times. And again, that's why I say a lot of family farms are going to get taken out on this, because they're not structured financially. They don't know how the banks operate. They don't know what the bank's looking for. They don't know how to expose all the weak points of the bank. They don't know what their numbers look like. They're just not structured, guys. And that is one of the biggest things that we focus on inside of Legacy Farmer. So my friend, hope you found this episode valuable. Hope you take action because of it, because the future of your operation definitely depends on it. So my friend, we'll catch you on the next episode.